Hello, everyone, and thank you for joining me today. We are going to dive into a concept that is gaining popularity but can be complex: infinite banking. I am Dr. Parisa Aflatounian, and I specialize in helping individuals and business owners build financial security and leverage their assets for long term success. So, what is infinite banking and how can it potentially benefit you? Let's explore. At its core, infinite banking is not a product but a strategy. It is about recognizing that we all perform the function of banking every day. We save money, we borrow money for homes, cars, businesses, and we repay loans. Infinite banking proposes that instead of using traditional banks for these functions, you create your own source of readily available capital, essentially becoming your own banker. This is achieved through specific types of permanent life insurance policies, universal life and whole life. Permanent life insurance policies, specifically whole life and universal life, are the cornerstone of this strategy. They offer both a death benefit, protection for your loved ones, and the cash value component. Crucially, the cash value in these policies can grow on a tax advantaged basis, and policy owners have the ability to borrow against this cash value, making it accessible for personal or business needs. Let's compare the two primary types of policies used. In this slide, you can see that the differentiation between those policies from the premium, cash value growth, dividend policy loans, death benefit, primary advantage. So the whole life insurance offers predictability and guarantees your premiums are fixed, and the policy has a guaranteed minimum interest rate that the cash value will grow at. Plus, the death benefit is guaranteed. However, whole life can be less flexible and early cash value growth might be slower. It is often favored by those seeking consistency and long-term accumulation without significant market fluctuation. The premium, as we said, in whole life is fixed and guaranteed, but in universal life, the premium is flexible. Within set limits, you may adjust premium payments, including skipping a payment or increase the death benefit. The cash value growth, as we discussed, in whole life is fixed and guaranteed, grows at a fixed guaranteed minimum rate, whereas in universal life, the growth is tied to an index like the S&P 500, offering higher potential returns than whole life, but with more variability, includes a guaranteed floor downside protection. There is a dividend in whole life insurance. Some policies are participating, meaning you may receive dividends based on the insurer's performance, which can boost cash value. But in index universal life policies do not pay dividends in the same way, but the index performance can result in substantial cash value increases. The policy loan in a whole life, you have access to capital faster than universal life. Loans are taken against the cash value, not directly from it. The policy continues to grow at its guaranteed rate. But in universal life, you can access policy loans, but the interest charged and the impact on the policy's potential for index-linked growth differ from whole life. The death benefit, as we discussed in whole life, is guaranteed and permanent, but in universal life is adjustable, means that you may have more flexibility to increase or decrease the death benefit over time. The primary advantage for infinite banking, whole life has a stable, reliable foundation where cash value growth and death benefit are guaranteed. In universal life, offers the opportunity for higher returns and greater flexibility in structuring payments and benefits. Universal life, specifically indexed universal life or IUL, offers more flexibility and the potential for higher cash value growth tied to a market index like the S&P 500, but with downside protection through a guaranteed floor. Premium can sometimes be adjusted within certain limits, and the death benefit is also somewhat flexible. However, IUL can be more complex, and early cash value returns are not guaranteed. It may be suitable for those with some risk tolerance who seek potentially higher growth. One of the key benefits of infinite banking is the ability to borrow against the policy's cash value. Unlike traditional loans that require significant documentation and credit checks, policy loans are generally faster and easier to access. Crucially, the money you borrow is taken against your cash value, meaning your cash value continues to have the potential to grow based on the policy's interest or index performance, even while you are using the loan proceeds for other purposes. It is access to capital without liquidity, your assets. So the key consideration are long-term strategy, meaning that infinite banking is not a get-rich-quick schema or a short-term solution. It is a powerful long-term financial philosophy that requires discipline and a multi-year commitment. It is designed to be a sustainable cornerstone of your wealth building, often spanning decades and passing on across generations. The proper policy structure is critical. This is arguably the most important differentiator. Not just any permanent life insurance policy will work. The policy must be specifically engineered and properly structured to maximize cash value accumulation and minimize early commissions. This specialized design ensures maximum liquidity and faster cash growth, which are essential for fulfilling the banking function. The financial stability for infinite banking to work effectively, a foundation of overall financial health is required. The premium must be consistently funded. This strategy is most effective when used as a complement to, not a replacement for, a solid financial foundation that includes proper budgeting, emergency funds, and diversified investment. Lastly, seek professional advice. The structuring and implementation of a legitimate infinite banking policy are complex and require deep expertise. This strategy should only be undertaken with the guidance of a qualified financial professional, such as an authorized infinite banking practitioner or a highly specialized life insurance agent like Dr. Parisa Aflatounian. Attempting to structure this without expert guidance can lead to costly mistakes and a policy that does not meet the necessary banking criteria. As we said, infinite banking can be a powerful financial strategy, but it is crucial to understand it's not a get-rich-quick schema. It requires a long-term commitment and proper policy structuring from the beginning. It is best suited for individuals or business owners who have a consistent income and the ability to maintain policy premiums. If you are considering this approach, I encourage you to seek professional advice from a licensed financial advisor or the insurance agent who can assess your unique situation and help you determine if it aligns with your financial goals. Thank you for your time today, and please reach out if you have any question. You can book a 30 minutes consultation appointment via my Calendly link that you can see the link in this slide, and also please subscribe my YouTube channel and visit my videos. Thank you.